Hello, good evening and welcome to Business Live. Coming up, Ghana's unemployment rate falls from 13.3% to 13.1% in the third quarter of 2024, although youth joblessness continues to pose a major challenge.
Unemployment rate is consistently higher than overall unemployment rate, with an average rate of 32% among persons aged 15 to 24 years and 22.5% for those aged 15 to 35 years in 2024.
We have more for you on that. Also in this bulletin, Bank of Ghana directs all mining firms to channel their dollar inflows to commercial banks as it takes steps to improve liquidity to aid cedi stability.
All these is meant to help, improve interbank trading, in foreign FX. That way they are able to support imports and other flows without necessarily waiting for the central bank to come in with some support.
Plus, the central bank again directs hotels to desist from quoting in dollars. We shall be speaking with the Ghana Association of Hotels. We have details of these and many more for you. Please stay on. Grateful you could stay on. I am Pius Kojobaka. This evening, the Ghana Statistical Service has reported a marginal decline in the country's unemployment rate, although youth joblessness continues to pose a major challenge. More in this report.
According to the July 2025 edition of the Quarterly Labour Statistics, data from over 9,000 households show that Ghana's unemployment rate fell from 13.3% in the third quarter of 2024 to 13.1% in the fourth quarter of the same year. Government statistician Dr. Alhassan Idrisu described the development as modest progress, but stressed that the figures highlight persistent labour market distress.
In 2024, youth unemployment remains alarmingly high at 22.5% for ages 15 to 35 and 32% for ages 15 to 24. This evidence highlights the urgency of expanded and more focused labor market practices and policies, such as retraining and skilling programs to combat skills mismatch and boost employability.
He added that initiatives such as the 24-hour economic policy could help absorb the growing youthful labor force by creating more flexible and accessible job opportunities.
The proportion of youth not in employment, education or training increased consistently in the last two quarters of 2024, reaching 25.8% for the 15 to 24 age group and 22.4% for the 15 to 35 age group in 2024 quarter 4. This reflects persistent youth unemployment challenges and disengagement from both work and education, reinforcing the need to expand economic opportunities, employment opportunities, and initiatives and promote economic expansion. And we can do this through programs such as the 24-hour economy, which is currently under implementation, to create more flexible and accessible job opportunities.
He further urged government to expand training and job schemes, reform TVET, and provide affordable credit to boost youth and women employment.
We are proposing that there's a scale-up of apprenticeships, graduate employment schemes, and also job placement services. There would also be the need for government to reform and expand the TVET to match training with demand, especially in digital, industrial, and green economy sectors. We recommend also that government should provide affordable credit to small businesses to boost job creation, especially for women and youth.
While the slight decline in unemployment signals progress, the Ghana Statistical Service concluded that tracking youth joblessness must remain a national priority.
Let's now go to the central bank, because the Bank of Ghana has directed mining firms to now channel all their dollar inflows to commercial banks. Now, this marks a reversal of the initial directive where the firms were supposed to give all the inflows to the Bank of Ghana. The move is part of measures to improve dollar support for the market in addition to what the central bank offers. Dr. Johnson Isiama is the governor of the Bank of Ghana.
All these is meant to help, improve interbank trading, in Forex FX. That way they are able to support imports and other flows without necessarily, waiting for the central bank to come in with some support. So it is all expected. It is based on what has happened, the sharp appreciation and the fallouts. Remember, some other people, certain actors also, like you look at the black markets, what we call the black market. Certain things are going on there, but we are having a good look at them. We are taking certain measures. We are taking advantage of the situation to fix the foreign exchange markets. One of the things I can tell you is that we've discovered quite a number of leakages, in the FX markets. Leakages because of technological developments, for example. Suddenly, some people are using crypto channels, for example, to terminate. When that happens, they bypass the interbank, FX market. So certainly, So, but it's our job, to create the platform to be able to regulate those. And so remember, we spoke about bringing on board a framework to regulate, virtual assets, for example. Yeah. That is likely to come on board before the end of the year. And so going forward, we don't expect, people to outwit us, so to say. We are doing several other things. You might have seen a number of notices that we have brought out, quite a number of them.
And before I come to that one, so the assurance I get from you is that you have adequate reserves. The Bank of Ghana has not run out of dollar cash or liquidity to meet the market demand. Because when you engage some actors in the market, the perception that they are pushing out is that BoG has been on the market, they are out of dollars. That is why we are seeing the current pressure. Can I get that assurance from you that you have the adequate reserves, liquidity to support the market when it comes to the Bank of Ghana's bid of contributing to the market?
George, we have adequate reserves. But the fact that we have adequate reserves does not mean we support the market alone. As I've explained, the interbank market is supposed to, take care of itself as well. And so we are fixing the issue on a number of fronts. We are, taking certain steps to ensure that, liquidity in the interbank market improves. For example, deciding to revert, mining flows that accrue through the mining firms back to the interbank market. It's one of the ways of solving the problem. So it's not going to be just the Bank of Ghana supporting the markets continually. It will be getting the interbank FX market to function. And so we only come in when there is some, demand that the market is not able to take care of, and then we come in. So ideally, that is what it ought to be. Like I said, because of the leakages also, that is also why you don't see as much activity on the interbank market. And so we are working on the leakages. The notices we have brought out are timed. They actually meant, to take care of those leakages. So going forward, we are optimistic that trading on the interbank market will improve. Thereby, the delays when it comes to, importers, financing their imports, etc., will be addressed. So this is a short-term, challenge as we see it.
Dr. John C. in that interaction with my colleague George, you have it there. But we want to stay a while longer at the central bank. Again, they have directed some institutions to stop pricing, quoting, and invoicing, as well as advertising payments in foreign currencies within Ghana without authorization. More in this report.
In a statement, the Bank of Ghana cautioned institutions, both public and private individuals quoting, advertising, issuing receipts, receiving and making payments in dollars without authorization to stop immediately or face the law. The central bank said the Ghana cedi remains the only legal tender. Accordingly, no resident of Ghana, unless duly licensed or authorized by the Bank of Ghana, shall price, advertise, invoice, receive or make payment in any foreign currency. The Bank of Ghana set school fees, sale and rental of vehicles, sale and rental of real estate, airline tickets, domestic contracts, retail shopping, online sales, and hotel accommodation, among others, must not be quoted in dollars.
Let's get on to Zoom and speak to Dr. Edward Akanyamike Jr., the current national president of the Ghana Hotels Association. Thank you so much, sir, for making time to join us here on Business Live. And as far as you are concerned, do some of your members quote prices in dollars? I'm wondering.
Pius, thanks for the opportunity. This directive from the Bank of Ghana is not new to the hotel industry nor the association. Indeed, we've met the BoG on a couple of occasions to try to make a case because of the nature of our business, but it was declined, and they indicated that hotels could apply on individual basis if they needed that authorization. As far as I'm concerned, I'm not aware of any hotel that has received that authorization. So the simple answer to your questions, I'm not aware.
All right, that's fine. But do you think, due to the cost of operating hotels, which include importing goods, hotels must be allowed to index transactions in dollars?
Indeed, Pius, that's part of the argument we made, because, like you rightly said, we import a number of things for our business. And then apart from that, for the convenience of our customers, we deal with local and international customers. Some come with a foreign exchange, and there's sometimes the inconvenience involved in having to look for a forex bureau, even though I must say that some of the upmarket hotels have forex bureaus within their premises, which the customers can easily go to exchange. But these are some of the arguments we made, but it was not accepted. So it is what it is.
And I don't know what you make of arguments from a section of the the general public, which, of course, they say that it is really unfair to index prices in dollars, and they have a fair argument.
Pius, I don't think the issue is about fairness or otherwise. The point is that if our currency was stable within a good economic range, okay, that has sort of happened in the past few months, okay, a range that is convenient for importers and exporters, I don't think anybody would have an issue with this indexing in dollars. It's because the currency has not been stable in the past. You buy at a certain level, and in the next moment, your local currency depreciates, and then you have to change again into the dollar to go and import. Those were the issues that were raised. So if the BoG can maintain the stability of the cedi, I don't think it will be an issue of fairness or not.
But the cedi itself has been stable for quite some time now.
Well, for how long, Pius? Even now, it's beginning to depreciate a bit.
Marginally.
The governor says that it's a blip. But these are things that should be for a long period, where we all begin to gain confidence in the cedi stability. That's when there will not be an issue of pricing in cedis or in dollars. It will be our local currency. And don't forget that it's a matter of a public good. We all want the goodness of our currency or our cedi. Okay, so the measures that the BoG is putting in is something that we all support. Okay, but that which will encourage people to do the right thing is what we're also hoping for.
The central bank has spoken and given the directive. Are you going to comply? And I'm wondering if it is going to be implementable.
Of course. Why not? In fact, it's been the case over the years. I told you that we have made the BoG in the past before. So as far as we are concerned, our hotels are not supposed to invoice or charge in dollars. That's the case, and they are all aware. I don't want to believe that they are flouting it, but again, it is to say that let's make the environment such that when the directives are given, we are able to comply without any sweat.
President of the Ghana Hotels Association, Dr. Edward Akanyamike Jr., thank you so much for making time to speak to us here on Business Live. And still within the banking space, the National Banking College has hinted of plans to introduce a program on Islamic banking from 2026. The principal of the college, Gloria Quarti, made this disclosure at the annual general meeting of the college. She explained that the move adds to a number of reforms being undertaken by the National Banking College to build the country's banking workforce and improve the sector. More in this report.
In the year under review, the National Banking College made significant strides. The introduction of programs in fintech, ESGs, and digital transformation strengthened the capacity of bankers in addressing industry trends. For their financials, the college recorded a surplus of 10.1 million cedis, up from 8.8 million cedis in 2023. This growth was driven by a remarkable 50% increase in internally generated funds, which reached 8.6 million cedis by the end of 2024. Principal of the college, Gloria Darling-Corte, attributed this achievement to deliberate institutional reforms.
The National Banking College, as you have seen, in the past 3 or 4 years, has consistently improved on its operations and its delivery, delivering better on its mandate and carrying the banks along. As you can see from today's attendance, we have almost every single bank here representing their institutions and participating actively in what we did. And so we are very proud of where we are, and we acknowledge also that there is room for us to keep growing, and that is what we undertake to do.
The college also pointed to strategic partnerships with local and international stakeholders, reaffirming its commitment to being the center of excellence in banking and financial services training. Madam Gloria Corte was optimistic that the introduction of a program in Islamic banking will align with the central bank's vision and deepen financial inclusion.
It is one of the areas that the central bank is actually looking at. And so we won't wait for it to start in full before we begin looking in that direction. And so, yes, we are looking at Islamic banking. We are doing our research and putting our works together. And hopefully from next year, we will begin to bring that knowledge also to our banks. Because as you know, most of our banks, in fact, all our banks, nobody is into Islamic banking at this point in time. And so we are just moving in tandem with the vision of the governor of the central bank. And that's exactly what we are doing. So we intend to move into that space in terms of training.
Looking ahead, the National Banking College plans to leverage emerging technologies and strategic collaborations in the short to medium term to build an exceptional future-ready banking workforce.
Let's now pause for a breather. We'll be right back. Welcome back to Business Live. Enterprise Trustees, the pensions management arm of Enterprise Group, says its schemes recorded strong performance in 2024, growing to 7 billion cedis. Managing Director Joe Ampofu attributes the growth to strategic measures put in place by the company to protect and maximize value for contributors. More in this report.
All our schemes that we managed in 2024 were able to grow our schemes to almost about 7 billion. And that in itself, if you look at it, what actually led to that was a combination of the kind of returns that we churned out and then the contributions that came in. And largely, we noticed that a majority of, when you look at the split, about almost 60-70% of it came from returns, and then the rest of it was through contributions that come through on a monthly basis. So the question is that where are the assets sitting? Yes, largely a chunk of it was sitting in the DDEP bonds, which were churning quite quite a chunk, and we all know what happened during the DDP. But because pension funds were ring-fenced, so that sort of gave us a little bit of edge as far as returns were concerned. And so if you compare a fund that was in a pension fund DDP and a fund that was in a DDP that was not in the pension fund, the returns were day and night. So the banks, for instance, were taking almost about 9%, whereas the pension funds had almost about 19.5%. So that in itself gave us that kind of, but we also had to deal with the modification laws, or trying to, according to IFRS, trying to ensure that we estimate properly. But to a large extent, that helped us to be able to grow the fund. And at the end of the day, we see where we are today.
The Imani Center for Policy and Education, in partnership with the International Institute for Sustainable Development, has held a roundtable discussion on the design and implementation of Ghana's new independent fiscal council. More in this report.
Event themed Implementing Ghana's Fiscal Council, Design Choices and Leveraging the Legal Frameworks to Strengthen Fiscal Institutions focused on how to operationalize the council established under the Public Financial Management Amendment Act 2025. The dialogue brought together government officials, policy experts and international partners to explore ways of ensuring the council becomes an effective and credible institution. Speaking to the media, Associate of the International Institute of Sustainable Development, Dr. Fernando Mora, said the council must be equipped with strong technical expertise to guarantee its independence. He noted that such independence would not only strengthen the council's credibility, but also build trust in Ghana's fiscal management system.
For Ghana, it's to try to reach credibility around fiscal policy. So basically what we are thinking is that the role of the Fiscal Council on communicating fiscal policy, it is important. So what do you need to try to enhance that independence is people that brings credibility, technical people. Of course, it's going to be near the government, it's going to be aligned, but you need people who comes with a very strong technical background in order to, when they say, okay, the government is accomplished, this is going to be, this is the way we see the future of the dynamics of the fiscal policy, the deficit. People believe in them, and mostly the investors and the markets, because what you wanted to try is to communicate the sustainability of your fiscal policy, basically.
Chief Director of the Ministry of Finance, Patrick Numo, highlighted the critical role of reliable data in supporting the Council's work. He stressed that accurate and timely information will be essential for the Council to carry out its oversight functions effectively.
For a Fiscal Council to be able to advise government and parliament concerning their work, they need to have up-to-date data. Somebody made a point about real-time data, so that the advice they give will be relevant for decisions, and also for review of what has happened and for corrective actions to be taken. So data is very, very important. In our current age, AI is generating a lot of information. And if you don't generate own data, government's own data, then people will be compelled to go to other sources and get something and then bandage them around as if they are government sources.
Meanwhile, ranking member on the Committee on Economy and Development, Kojo Opon Nkrumah, called for the integration of existing data systems onto a single platform. According to him, consolidating databases will make access to information easier and enhance the Council's ability to deliver on its mandate.
While it is important for governance purposes that if an official entity publishes, that can be married with technology, where the various parties that contribute data, GRA, all of these other bodies, populate onto a certain public platform. And then that platform is what presents the data, and that platform has the data which can be analyzed. It's something we should consider, perhaps even parallel to the official versions of the publication that will be laid before Parliament.
The roundtable is expected to feed into ongoing efforts to build a strong fiscal institution that promotes transparency, accountability, and fiscal discipline in Ghana.
Thanks so much for watching Business Live. I am Pius Kojo Baka.